Hey, welcome back to Inventory Watch. We are going to talk about the Phoenix housing inventory and what's been going on in the last couple of weeks. I didn't do an update last week, so I've got 2 weeks to kind of go over with you guys. But before I do that, I wanted to go into a headline that I saw from Redfin, and which made me download some data to kind of verify some things. So I wanted to share that with you. And let's just kind of come over here to the Redfin screen. So it says investors bought 26% of the country's most affordable homes in the fourth quarter of 2023, and the highest share on record. So investors are back in purchasing homes, and that may explain why we've seen an increase in sales happening, even though interest rates are still between 6 and 7%, and the home buying sentiment is really low across like the average person. And when I pulled the data from Redfin, the national real estate brokerage, I found that these are the top zip codes here in the Phoenix metro where investors are purchasing. And it's interesting to kind of see this trend, because it's as high as 48%, almost 50% of the inventory in some of these zip codes are being purchased by investors. And whether they're local investors or corporate investors, I don't have the access to that data at this time, but I will do a little bit more digging and see what I can find. So here's what we have. The top zip codes where investors are purchasing are going to be El Mirage 85335, Santan Valley 85143, Glendale 85303, South Phoenix, like where the new 202 is going to be 85043, Tolleson, Laveen, another one for South Phoenix, Avondale, Maricopa, Queen Creek, Maricopa again, Buckeye, the Glendale area of Westgate, the Phoenix area 85018. It's kind of like where those older mid-century kind of modern homes are, like Arcadia Light, and then Scottsdale. So that's 35 to 48% of the inventory is being bought up by investors in these zip codes. So if you put your house on the market, there's a good chance it could be purchased by an investor. So keep an eye out for that. Let's go back and look. So like this is my overall gut feeling about this, right? Like why we were all sleeping and complaining about the high interest rates. We weren't buying houses. And at the end of 2023, if you go back and watch any of my inventory watches, it was like the nuclear winter, there were no sales happening, things like that. And I guess of the sales that were happening, they were investors. So there was a lot of things happening in Q4 that we didn't really see that was happening. So that kind of makes sense going into 2024. If we come and look at Inventory Watch, let's find the correct screen here. We can go into the numbers and see like what is our inventory look like what's happening right now. And we'll go into presentation mode here. And we'll look at what's happening. So this is for today's March 3rd. And so I looked at the past couple of weeks just to see what's happening. And for new listings, you can see Q4. If we take a look at like Q4, this is, October down to the end of December. And we saw inventory just kind of, or new listings coming to the market just kind of disintegrated. And so sellers weren't interested in putting their home on the market. But right after the new year hit, we started to see all sorts of inventory come back to the market, which is great for home buyers because we are still in a very low inventory situation here in the Phoenix metro. So with new listings in January, we were up 14%. The February inventory target to beat was 7,724 homes. And we ended the month with 8806. We did have an extra day because it's leap year. So we were also up another 14% going into February. So starting the year, inventory's up 14% for both January and February. My projected target, I thought we were going to see anywhere between 8,300 and 8,500, and we beat that by 300 homes. So we are seeing more inventory come. So total active inventory, this is all includes the brand new inventory plus the inventory that's been sitting on the market. And this fluctuates based on how much inventory we get and how many homes go under contract with home buyers. So we, 2 weeks ago, we were at 16.3 and we were actually starting to pen down a little bit. We had gone from like 16.6 to 16.3, and now we're back up to 16.6. So that little dip in buyer demand that we had seemed to have kind of fizzled out. We did see interest rates go down a little bit, and I'll talk about that some more, but inventory is up over the last 2 weeks, almost 2%. The average list price also did kind of see it was consistently going up. It was like, 830 to 850 to 872. And this is the first week that I've seen the average list price go to 870 from 872. So it seems like we've hit our pricing top with home sellers. I feel like they were getting a little bit out of control, but you can see like the average list price is in the 800s. The average pending price is in the 600s, and the actual, when they close, the average closing price is in the 500s. So you can see where buyers and sellers are really not on the same page in our market. And so this is active inventory here, where we ended each month. So we ended, we were really, really low at the end of December because people weren't listing around the holidays, but investors were buying, which was interesting. And we started to see more inventory come to the market in January, and 14% increase, another consistent 14% increase for February. And this is where we are month to date for March. And so this will be a moving target as we go through the next few weeks of March. Let's take a look at pending inventory. This is the number of buyers that are out there running around the market right now. Last week, we did see a spike of active buyers, which is why we saw the active inventory kind of come down a little bit from that 16.6 down to 16.3. And now we're back up to 16.6. So this rush of buyers didn't last, and it came right back down to about 4,000 buyers. So it is, I put a plus sign there. It's actually down 6% week over week. This was like a 14% increase from here to here. It was a huge increase in buyer demand just from like the middle of February. But that seemed to come back down and normalize. So it was a weird boost in the month. The last 30 days under contract price, like I said, like the average list price is in the 800s, but the average under contract price has also come down and kind of stabilized. So it was as high as 666,000 a few weeks ago, and we've kind of stabilized here around 625. So under contract prices haven't trended up in the last 2 weeks, and so we'll keep an eye on it and see where it's going. All right, the pending ratio. This one is my favorite because it tells us what kind of a market we are in and who is in control. At the end of 2023, the pending ratio was in the mid 30s, and we are up again, near 50, which puts us there's a seller's advantage in our market because there's more buyers now, and there's still a lack of inventory. 16,000 homes for the Phoenix Metro with millions of people is not a lot of homes for us. So we're still at a seller's advantage right now in most of the zip codes. So it just depends on where you're looking. And if you're in any of those zip codes, if you're looking to purchase and you're in any of those zip codes that I mentioned at the beginning of this video, where investors are purchasing a third of the homes on the market, you may be running up against investor buys again. So something to keep an eye on when you're thinking about buying. So we total pendings went down from 9,000 to 8,300 from 2 weeks ago to this week. And that is because the pendings actually close. So we do see the pending ratio reduce the first week of the month. And if we're comparing the pending ratio the first week of March to the first week of February, we're actually up 2.5-ish points on the pending ratio, which means that we still have a lot of buyer demand going on. So it is still a seller's advantage, even though we did see it decrease, which again, it's because the pendings actually closed and there will be new buyers coming into the market. So we will keep an eye on that and see, like, are we going to have enough buyers to keep the pending ratio high? If you're a home buyer, you want to see this lower. Under 40 is kind of when it starts going into a buyer's favor. Mid 30s and lower 30s are even better for home buyers. So keeping an eye on that. If you're thinking about selling your house, I put this together. It's called mysoldscore.com. And this is a great way to get your pending ratio for your neighborhood, for your exact zip code. It kind of drills it down a little bit and it's more accurate. And so that if you could get a sold score for your home, it's super easy. Just put in your address, create your account, and you can get your sold score. It's totally free. And I put this out there for you guys to take advantage if you're thinking about selling your home. Let's talk about mortgage rates. So mortgage rates started at the beginning of the year. They had fallen, the last quarter of 2023, and they were kind of, they had peaked in 2023 at like almost 8%, or I believe they did hit 8%. And after the overlays and all that kind of stuff. And towards the end of the year, it had gone down here to a 30-year FHA, with 6%, and some lenders even had like the mid fives happening. And then interest rates started to go up again. And now they kind of pulled back a little bit after the latest Fed meeting. So they were closer to 7, or they did hit, I believe, 7%. Oh, I'm going the wrong way. 7%. Yeah. So 30-year fixed was at 7.8%, and FHA is now at 7.57%. These were higher just 2 weeks ago, and now they're starting to come back down. I get an update from a broker here. His name's Jim, and he's awesome. Let me pull it up for you. We can get like the latest. So this is a shout out to Jim Barker, Arizona Wholesale Mortgage. They have the best rates of always what I've seen. So they've got a conforming FHA. This was taken today. I pulled this off of the Mortgage News Daily website. So you can see they're at 7%. Jim's got a 30-year at 6.6% conventional, FHA from 5.8, VA from 5.8, and you can do 0 down with VA for up to $1 million or $1.5 million. And then he's got jumbo loans starting at 6.5, and he locks in lines of credit, which are really popular right now at 8.25%. If you've got a lot of high debt credit cards, you may want to consider a HELOC. I don't like tying debt to my house, but getting out of credit card debt with an 8% fixed is an amazing thing. So something to consider there. Sold homes. So we can see all of the slow home buying at the end of the year. There were no buyers, there were no sellers bringing their home onto the market. We kind of saw sales kind of slump. And then going in, so all of the new pendings, like January 2024, buyers came out of the woodwork. Interest rates were low. We saw a lot of people putting homes under contract, which now in February, we see them all kind of closing. So we should start to see this continue to rise as we move, into the spring. And then usually we kind of see home sales kind of slump a little bit in the summer when it gets really hot here. One of the other things I wanted to show you guys, let's go back to the pendings, because that graph, I kind of skipped over this. So that graph, you can see like home buyers were not like, it was rough the last, last quarter, Q3 into Q4 of 2023. Home buyers were just not having it. Again, interest rates were up at 8%. But you can see interest rates fell, and it just started stimulating home buyers to come back. And because the buyers were out of the market, like the last, quarter and a half of 2024, it started to create some price reductions here in Phoenix. And I bet you that's why the investors kind of started to see pricing coming down, and they were like, oh, that might be a good deal for us. And so because that, home buyers, we were sleeping, like we weren't having the high interest rates, and we're still kind of not having it now. Affordability is still an issue, but investors like started coming back. So we're going to see this kind of trend up, peak out, and then come back down for 2024 around. I probably peak out here between April and May, and then start to slowly come back down as it gets hotter, and depending on what interest rates do as well. So we'll see what happens there. Let's talk about, we did sold homes. So let's talk about the rental market. It's interesting, the rental market, because again, we started to see investors come back and start purchasing. The rental inventory keeps going down. Every week I come on here and I look at the rental numbers, and the inventory just continues to trend down. This is sold homes. Let's go back this way. So new rental listings, you can see that we kind of peaked at the, new listings coming to the market are between May and probably September here. I guess we see a lot of the inventory come in the middle of the year. In December and January, February, we're not seeing a lot of new listings coming to the market. So listings continue, the total number of active listings just continue every week. Like we lose another 100 to 200 homes on the rental market, which is kind of holding the rental market stable right now. We had 4% new listings in January and 2% in February. Not huge amounts of inventory, like 14%. Like anything over 10% is like a significant amount of inventory. So when I see a 2%, it's really not that much. And honestly, we only peaked over 2% because we had that one extra day in February. I think if we were comparing 28 days to 28 days, they were roughly around the same amount of inventory. So and again, the total active listings continue to trend down for the rental market. So if you have a rental, you could probably put it on the market and get it rented. It's continuing to trend down. So if we look at pending and contingent rentals, these are how many active renters there are in the market, and you can see like this is a trending number. It kind of it's a compounding number. So it starts with 482 at this week. Next week, it'll be up because it'll be 482 plus the new renters. So that's why we kind of see this go like this. It always peaks up for 4 weeks, and then it falls because those contracts actually close. And then this is the real number of renters coming back in the market. So the first week of the month is always a good way to tell if we're growing in the amount of renters. So you can see the first week of November, we had 286. December, we had 416. January, I guess I don't have the first week of January. But we do have the first week of December somewhere right here. We had 564. And in the first week of March, we have 482. So we actually went down the number of renters starting the month, which is not a good trend to see in the rental market. But let's talk about closed rentals, because this is where the active rentals is a little bit, the number of active renters in the market is a little bit weird in our MLS and the way that data pulls. And so looking at the actual number of closed rentals gives us a better solid number. So you can see in December and January, we had low amounts of closings, and it did start to peak up. So this is the true number of demand when we're looking at rentals here in the Phoenix Metro. So if we're looking at this number, we did close 3.5% more this year than we did last year. So rental demand is kind of steady, and inventory is going down, which is going to kind of put pricing probably in the upwards direction. It's going to put upwards pricing pressure on the market. So in January, we saw almost 7% less renters. February, we did see renters starting to come back. And then the pending ratio, we had 482 renters on the market. The pending ratio is a 7.6. this week. Again, the pending ratio always kind of resets the first week of the month. The pending ratio for February was actually 8.4%. So this means we actually saw a decrease in rental demand going into the first week of February. Like I said in 2 slides back, we had about 482 active renters in the first week, and the month prior we had like 500 and something. So that means that rentals right now, even though inventory is decreasing, we're not seeing a large demand. And so it's a little bit balanced. And I think it just depends on what zip code you're looking for a rental, if you're going to see rental prices spike up. So that is the rental market in a nutshell. So that's all I got for you guys. Thank you so much for joining, and we will see you next week.